Hello everybody, welcome back to the channel. I have some unfortunate news. I had a pretty bad day trading today. I got chopped up, and that's I didn't follow the plan. Again, this is a reminder that it is not the plan, it is me, um, uh, and I made a mistake. So I'm going to get into the mistake I made, how I plan to follow my trading plan better. Um, and I didn't make a video for last Friday, February 28th, so I'm going to cover what I did last Friday first, then I'm going to cover what I did today, and then maybe I'll give a summary at the end, just general thoughts. So let me start by going to the Discord and looking at the Friday, February 28th. So the first trade I took that day was to get short. EMAs are bearish. We are below the day's open. But here's the thing. Okay. We were expanded quite a bit from the hourly. Okay. And we just had a big hammer up bar on the hourly. So it's looking like, hey, we're probably going to mean revert a little bit and come back to the mean. That would be expected. The market is just oscillating between, some people call it drift and mean reversion. Some people call it, expansion and contraction. But it's just, it moves, it doesn't move. It moves, it doesn't move, or it pulls back. And based on this hourly chart, it seems like we can expect a pullback move. And so that's what happened. Let me go to the next screenshot. So I got stopped out on this trade, unfortunately, but that's okay. I shouldn't have. It tried to break out from the prior day low. It failed. There were tons of buyers there. It consolidated a little bit. Kind of looks like the 5-minute EMAs are going to switch. And it makes sense if we're trading above this 1 hour. If we trade above this 1 hour hammer up candle, I think that's a good place to get long, logically, based on my plan. So that is exactly what I ended up doing. I ended up getting long, targeting kind of this last pause area from the prior day, 9:15. Looks like I ended up getting out for green. I'm just trying to look at the chart. Okay. It looks like I missed a pretty good short later in the day. Looks like too. So it's unfortunate, but so it goes. And yeah, I didn't get out I didn't let it go all the way. I think I wanted to get out because after that bar 10, I thought, it's probably still a little bearish. Okay, so that is a review of Friday's price action. Sorry, I didn't do it last Friday, but the weekend was starting, and I just ended up having a little bit of a date night and hanging out. So I might start doing that where I combine 2 days videos into one, just so I'm uploading less and just covering more in each video. Okay, so today's price action. Listen, I slept in and I missed the first 30 minutes. My alarm was in the other room. My phone, which is my alarm, I left it on the couch last night. I didn't keep it in my bedroom, and so it didn't wake me up in time. So I missed this first move down. Last night I actually anticipated that we would be moving down today. I wrote that in my my daily notes, where I just kind of write down my ideas. Why did I think we were going to move down? Because we had a mean reversion on Friday, so we're back at the top, and I expect another leg to happen to retest this low. So yeah, I missed this first move down, and I don't know why I was trading here bullish. I thought these EMAs were switching to be long, but I shouldn't be getting long below the prior day. I shouldn't be getting long below the day's open. We're all also just in a very bearish trend still. Like, I thought, this is going to be this is a pullback, this is a flag. I thought we're going to have a second move up, but we are very bearish. We touched the 65 moving average, which is the 9 on the daily. We touched it and we rejected from it and we pushed down pretty hard. And so it's pretty. I should have only been short today. I want to show this. If you've been watching for the past couple weeks, you're familiar with this. This is like my higher time frame stress tests. I added a new one today, which is 1 hour chop check, just to make sure we're not inside the previous 1 hour bar. I'm not saying I can't trade inside it if the setup makes sense. Like if the hourly EMAs are bearish, we're below the open, it's been consolidating. Like yeah, I could get in, but it's just another reminder to remind me what the best setups are, which is outside bars, right? Like when we break outside this 1 hour bar, we push up. When we break this one, is we open up, so it closes the gap. We consolidate. So here would not be a good place to trade. Here would not be a good place to trade. Shorting below this bar would be a good place to trade, and we could use the 5 minute as the entry, because I want to really shift my focus to trading the 1 hour chart using the 5 minute as entries. The 5 minute is important, and obviously it's like what I used to enter, but I've just been focusing on it too much. I need to focus on the hourly more, shifting to be a higher time frame trader, and catching those 1 or 2 hourly bar moves. Look at right here. This would not be a good bar because it's inside this bar. This would not be a good bar because it's inside this bar. But this bar, we've consolidated for quite a bit. The EMAs, moving averages have caught up. We got our hammer down. Outside this bar, really great short. Second really great short. The first bar of the day, not inside the prior day bar, push down, aggressive selling. A lot of the last week it opened up with aggressive selling. Just outside these bars, that's where the magic happens, the big moves. That's what I really need to focus on. Here, it's like we just keep seeing it, over and over again, repeating itself. Bullish here, breaking up a mean reversion trade here. I don't think this is a great trade because you're going long in a downtrend, but at least you're outside the prior bar. Maybe you're above the open of the day. Like that is a reasonable trade. And then once you get back to the 21 EMA on the hourly, you get your consolidation bearish bar. You break below it, boom, you're short, and you go down quite a bit the next 2 hours. You drop from 6,005 down to 5,955. So, huge decline, 50-point decline in 2 hours. And maybe you would have to make your stop loss wider. Maybe it would have to be, that's a really big stop loss, but you can use the 5 minute here for those better entries. Try and get tighter stop loss. But today, we push down, consolidate for a couple hours, second measured move down. Like I only should have been bearish today, and I need to pre-select these higher time frame. I need to pre-select these stress tests so I know what to look for. And it's like I want to be short with the EMAs, okay? Because that makes it green. I want to be short below the prior day low. Okay, that can't happen because we're nowhere near the prior day low. We're near the prior day high and inside the prior day range. So the best we can get here is short inside the prior day range. Short below open. Yeah, we push down from the start, so we should only be looking for shorts. We shouldn't be looking for longs below the open. Okay? So short below the open. 1 hour chop check. Are we inside the previous 1 hour bars? We don't want to be inside the previous 1 hour bars, and we want to be aligned with the 5 minute EMAs. So, according to that, there's nothing really good in here. This is all chop. There's wicks on the bottom. There's wicks on the top. This is just not a good time to trade. And trading is waiting. It's people always try and hammer into me. Trading is waiting. It's avoiding these bad times. Okay, not a good time to trade in here. But after we consolidated for a bit, look at bar 43. It is the first bar of the new hour. Okay, it's a strongish bar near its close, near the bottom of this range. These EMAs have been contracted for a while and intertwining. And on the hourly. But look at what we get on the hourly. We get a hammer down bar. Okay, the EMAs are still bearish. And I didn't take this trade. I was watching. I thought about taking this trade, but I didn't take it because I had already lost 2 dumb trades, and I didn't want to be emotional, and so I missed a great short. But I could have gone for 30 points, but I was emotional and I didn't want to make that move. You look left, you target this choppy area here, chopped a little bit there. Just that's like the next logical like measured move down if you're just looking left. So just target right here. It would have hit, would have hit for 35 down to like 6. You would have hit 30 points. And I say you, I'm talking to myself earlier. Here, we're inside chop. Not a good place to trade. Okay? Not a good place to trade. If this formed an hourly a bearish bar down, maybe we could consider getting short below. Except for the fact that we've made a big daily move already. After it makes this big move, it doesn't have as much juice left to make another move. So, just that doesn't seem right to trade there. But yeah, this was a dumb long. It was trading inside chop. I got chopped up today, and also my risk was way too high. I should be risking $75 per trade, but I put it on 2 contracts here, which was already a let's see how many points. This was already 100 points, but then we broke this bar high, and I was like, okay, like this is looking good. Let's get long, and yeah, I added another contract, and then we kind of corrected. We broke it, retest, retrace. We broke through the EMAs. The EMAs switched to be in our favor. We had a pullback. We had this hammer up bar 38. I got long above that, and then what happened? The market turned around and dipped down and went down. We had a hammer down, and the market made its second measured move down. It's simple, like what I need to do. It's not the plan, it is me. I need to be able to follow my plan better. And I need to make sure I'm getting lots of green when I enter, not lots of brown or yellow, whatever color this is. Beige. I need to have these be green and supporting. I need to be trading not inside the previous 1 hour bar, not inside. I need to be trading with the 1 hour EMAs. I need to be trading short below the day's open and long above the day's open. I can trade inside the prior day range, but if I'm below the prior day range, I should really be looking short. If I'm above the prior day range, I should really be looking long. And if there's a big gap, look at what the 1 hourly EMAs are doing and short. Like today, we gapped up, but these EMAs were short. It is very obvious we're probably going to close this gap. It's only look how this is like a 50 point, or no, it's like how big is this gap? It's a 30-point gap that was it ended up closing today after it pushed up on the first bar. But volatility is so high today, so I need to be using less contracts than normal. It was really dumb to lose this much money. Let me go to my performance center. $260 loss. That is really uncool to me, or for me. My risk is $75 a contract now, so that makes my R loss 3.5 R loss. Not good. I need to be better. I will be better, and I'm gonna hopefully turn around my trading. I'm focused on the higher time frames. I know what I need to do. It is not the plan. It is me. I acknowledge all that. So I just need to keep trying to do the right thing, keep focusing in, keep showing up each day and making sure that I'm not lying and convincing myself. Like right here, I should not have taken this trade, but I did. And I need to follow my plan and make sure that I don't do this. If I look left and I see we're in a choppy place, I shouldn't trade. And I shouldn't lie to myself and convince myself that it's okay to enter trades, that it's not okay to enter. It's got to be my pocket aces only. So, I know I've said this a lot. I know this is very redundant video from previous videos, but it's what I'm working on, and this is a documentary channel. I'm just trying to document my progress and my journey. So, it's what I'm working on, and hopefully I can get better soon and get out of this losing streak, because I was crushing it from February 6th to February 13th. Just crushing it. Or February 20th even, it looks like. I was up 8R. I was up $400. Since then, though, I am down 8R, and I'm down $600. And that's because my risk increased, that I can be down 8R, but be down 600. So, I'm down $200 since February 6th, but I'm hopeful that we're going to turn this around, and I'm just going to keep going, keep grinding away, keep messaging in the Discord and letting people know my progress and making these videos. So this is a good spot to end it, so I'll close it down, but let me know in the comments, how are you doing? What advice do you have for me, how I can improve? Let me know. I look forward to hearing what you have to say. Thank you for watching, and I'll see you next time. Peace.